whatever party mentions it, whatever candidate mentions it, whatever politician mentions it, the other party will test it, not your own party. So someone has to tackle that. And just to bring the call full circle, Pete, I found my Barry Bonds rookie card.
Okay.
What's that worth? Do you know?
I don't know. I'm just doing a little research on it. There's a Canadian company called Leaf, who I think Leaf and Don, who produce these, and the Canadian version is both in English and French. So I'm trying to figure it out right now. I'm like, man, this thing might be worth something.
Yeah, that's some people, of course, are gonna rattle off the obvious history or how may have some issues with how Barry Bonds hit those home runs, but the fact of that, they were still nice, really nice. You know, like it's really nice. As was the research on the call this week. Thank you for joining us, and have a good week.
Yeah. All right, what's oversold? Nothing. What's almost oversold? The dollar. Dollar yen. That's about it. I would say copper, but maybe not. Overbought. Nothing. Almost overbought. 10-year yield. Crude oil. Babadook. Fucking Babadook. Crude oil and then euro dollar.
It's April. It's not April.
It's not April.
No, it's August. It's August the 4th.
It's August the 4th, everybody. I'm Ryan Ritchie, Pronunciation King. I'm joined live in the studio by Head Judge CEO, Keith McCullough. Ryan, got any questions? Put in the comment section below. With that, Keith, I'll turn it over to you.
I love it. You weren't on the Mountain Dew last night or what?
No, not last night. But the previous week, I was sleeping in the office, and it was quite a week. But I had some sleep, so I'm ready to go.
I love that. And people love Rooster. I was in Boston. When I was packing the car, they were telling me, who's that guy Root? Where'd you find that guy that like he used to have a job like doing roadkill? And I'm like, and so Rooster got a lot of fans. And I just used a nice gift there. This is a little known fact.
Well, when I used to wake up the boys for morning workout, like, you know, in the hockey house, I used to live like instead of, well, it's kind of like a frat house, but it's called a hockey house.
Yeah.
And I'd just like, I'd get in there and Jonesy would do it typically now.
And everyone would be like,
Little did I know that was very good. Like, you gotta work on it.
boy, have you ever been to the Ohio State Fair? They have a rooster calling contest. You might have a new profession here. Just saying.
What were you doing at the Ohio State Fair?
I don't know.
Yeah, it's okay.
They got fried food. They got rooster calling fake calls. They got beer. I mean, what else you got? America. I haven't been there, but that's on the list.
All right, top three things in my notebook. Number one, this morning's going to be oil number if I can get myself together here. Number two is going to be interest rates.
Fucking rooster.
To buy the SPY. Now, I'm not long
Funny.
the SPY, but again,
Funny guy.
I'm not short the SPY, and I wrote about why I was buying things, which we'll get into. But first, if you've been long oil and or energy stocks, well done. Okay, so every single day at this point, you have a higher low and a higher high in the risk range. Every single day that's been perpetuated by an oil volatility.
Oh,
signal that, again,
did
very
gold just go
volatility with
bearish?
oil. So oil volatility, as you can see, is now in the high 20s instead of the mid 30s, high 30s. 33 is the trend breakdown line for the vol of all on that front.
Gold just went
It's
bearish.
bullish, and it's also hawkish in terms of inflation. Again, reaccelerating. We have that. Don't forget that CPI is coming up next week, which makes this setup to get longer here a little dicey, right? Because of course you go with the unemployment Goldilocks type report here that takes bond yields down a little bit to having to deal with that next week. We'll get to that. Again, play the next play first, but you know, inflation is obviously reaccelerating, and you have sovereign credit risk, so that's busting a move on point number two here on interest rates. Those two things at the same time. Not very many people are portfolio prepared for something like that. Again, for a long time, people didn't think that there could be credit risk. From here, I actually don't think that there is on the sovereign side. I think that there's plenty of credit risk where we've been shorting things, high yield and junk in particular, which have had a fantastic. I don't know how many more times I'm going to get a chance to short this thing, but I've shorted junk many times. HYG many times. They too are at the low end of the risk range. But again, that's what I'm going to be looking to short is the credit risk embedded in corporate America, which will not get a bailout. Of course, the U.S. government's going to bail itself out and bullshit everybody about their actual deficit and debt numbers, which Josh Steiner wrote a great early look, according to you. I have not read it yet. I was doing other things, but I will read it this weekend. Anytime Steiner goes off on something with data, you want to read it. Okay, so that's point number two. And again, looking at what I just said there, if you pull back on interest rates and you just look at the 10-year yield, 4.25, 4.25, 4.26% is a very difficult spot to get through. If it can get through that, that would be higher highs. If it doesn't do that, it would be lower highs. And if it makes lower highs, you're going to see what gold just did, which it went green as soon as bond yields tick down. Now, I think gold has actually done a great job hanging in there this week, given that we've had a monster move in real rates and nominal rates, and gold doesn't like that typically, but it hung in. And for our top position, which is currently my number one asset allocation, I was happy with that, even though I'm not supposed to have any feelings. SPY. Do you feel like you need to hedge after it goes down? Well, if you do, you're just doing it the wrong way. Now, I got plenty of clients saying, Keith, I can't believe, that there's not more downside from here. And it's like, there isn't. I mean, I wrote it, I said it, I executed on it. Again, if you can't get vol, the top end of my range on the VIX in particular, if you can't get that to make higher highs, in fact, it just made a lower high at 1654, then my risk range on the low end of the S&P 500 is going to come up. And it's come up pretty much every day, every week, and that's what it is. If you can't do that yet, if you cannot trade both sides of the game because you're fundamentally bearish or fundamentally concerned about U.S. debts and deficits, you got to get fundamentally better at executing against what's in between those two things, those two ears of yours. Okay? So that's a real important thing, is to be able to trade the tape both ways, risk manage your book. So for example, today, I'm 13.2% net long on the open. If you go back to the beginning of the week, I was like 2.5%, almost 3% net short. So that's how I do it. How you do it, totally up to you. But the signal's the signal. After 3 down days, you have a 74% implied volatility premium. So again, people got spooked. They bought short-term protection after they should have. Next time the VIX is at 1321, which is low end of the range, buy yourself some protection and go the other way again. And those are your top three things. Easy one to understand, right? Very easy. And now when the AI goes both, again, the AI signal is super short term and has nothing to do with the trend. So again, the trend for the S&P 500 is now, I believe it's 50, where are we at it? At 46.23. Trend bearish, you're at the low end of the range. Rooster signal on the AI signals that we built, and we're building them out for everything, incorporates our process, the fractal orientation, the construction. It's all, it's a very short term. So again, it can say buy because that's what it means. A cover order is a buy order. Okay, you got it. You got it. Look at how good our community's getting. Look at this. Look at the anxiety. You gotta be somewhat happy with that. I'd say that people are really dialed in. I mean, they know what to buy when there's a dip. They know to buy Japan. They buy India. They know what to do. They know these Hedgeye Nation faithful. They're well. Oh boy, they're fat. You guys remember this guy? I don't think I gave that.
Something in my eye.
Yeah. Oops. Here's Mike. See this thing? Barry Bond. Got my name on it. Put my name on it. I was talking about bonds this morning when Todd Jordan, for those of you that are along the DraftKings, how about Meta? How about some of these shots that we've had? Like our analysts have had some shots, some deep shots. Yeah. Great job. Friedman, Jordan, going down the line. How about Jeremy McLean and Brian McGough this morning on Amazon? And if you're not, like, one of our top clients from Boston said this to me, he goes, the problem is a lot of them don't get to see what we get to see all of them, right? Like, I mean, if you didn't watch the call, you didn't hear Jeremy McLean telling me how these numbers, particularly on the cash flow side, are going to improve, and that'll surprise people, that just means you didn't take the time to listen. It doesn't mean that I have to tell you every single thing. There's so many things. We have almost 100 people coming together to execute as a team on a process. There's a lot going on. But it's to those of you, and I salute you, to those of you that put in the work, put in the time, that's what made me, and I got a lot of work to do. What makes Rooster. I play well works till he has to drink 2 Mountain Dews. I'm all jacked up in Mountain Dew. What's the longest work day you put in?
I mean, yesterday was legitimately 18, 20-hour day.
Oh. And you say now you're feeling great.
I'm feeling great.
That's awesome.
It's good.
It's like you don't have to be David Goggins, or you don't have to be whoever you think is hardcore. Some people don't like Goggins. Whoever you think you are, if you're hardcore, that's hardcore. Okay? That's how you get to work with me, because we're working, right? Because we know that we're not as smart as the old wall. We're not the type who say, I don't do that, bro. But you have views on that. You have general views. Oh, I think inflation can go to 2. Feels like GDP is going to be 2 to 3. Like, if that's what you do, it requires no work to feel that, right? We're going to grind you into the ground. We're going to skate you underneath the ice into the concrete over time. Believe me. Okay? What else we got going on? Maybe we should get into the process. Marker. I got some interference there, though, when I tried to step into the batter's box. I ran in that bat. Yeah, I love that. All right, what else we got here? 45.01 was the close. Again, 44.91 is a higher low, and 45.97 is a lower high. Deal with it, okay? This is actually 10 to 1 on the upside today versus the downside. Probably one of the best days, certainly in the last 3 months to be long. That's why I'm long, okay? So that's a fairly straightforward setup. Again, no change on this setup where, really, if this were to shoot into the 17s and 18s, this number is going to go down a lot, okay? Now, when you think about it from a gamma perspective, pretty much exactly what we said happened on the upside last week when we said vol control funds are going to come in and buy. I think that's another big part of today. Don't forget that we have vol control funds, according to Craig and the team at Tier 1 Alpha, could have an incremental $12 billion to buy here on the open because, again, these numbers didn't change. So as you go forward in time, as short-dated vol events come and go, which we had plenty of them, don't forget we had a Fed meeting, we have the unemployment number out of the way, volatility is set up to come down because there's no top end of the range that would suggest that it should go up. Okay, so that's a real big thing. Vol control funds don't do research on Amazon, they don't do research on Apple. Oh, by the way, on Apple, if you think that the market moves aren't about flows and it's all about fundamentals, Bullshit. Right? Terrible quarter for Apple on the thing that matters. You know, like these things that some of you might have, like this phone. You know, terrible, right? Hashtag consumer slowing. In particular, people with more general income to buy some of these super expensive phones or fancy watches, right? That Apple didn't go up because they were about to have a great quarter. Apple went up because people had to chase it. Because it's not really a company in this case, it's really a factor exposure. It's a macro exposure. It's the most liquid and largest cap stock in human history. Hashtag MOAB, the mother of all bubbles. So just get comfortable with it. Get comfortable being uncomfortable with that. Because for a lot of you, it makes you uncomfortable that stocks can go up and down based on nothing other than flow. And it's okay. That's why we're okay with changing what we do, evolving what we do, and partnering with Tier 1 Alpha. And thank you for all of you who've signed up for that and see that data. The flip line, by the way, is 45.46. So where this market would really rip is if you get greater than that, okay? So if you get greater than that, I think you're going to go straight up to 45.97. That's one way to think, okay? That's where the gamma flips back to being in a position of positive gamma. The reason why the futures aren't up more is because gamma's in a negative position right now, okay? So that's a real important thing, dealers being in a negative gamma position above 45.46. With that, at 45.46, you'd say neutral. In and around it, I'd say you're neutral, but obviously through it, something to think about there. Volume yesterday, again, it picked up on, more so the day before that. On the sector side, 8 out of 11 were down. It was a good day for us because we're long energy. It was up over 1% at one point when I sold some. That was in the macro pro asset allocation. I sold some XLE energy. I sold some Indonesia because it was up. And now Indonesia's down, and energy, I don't know, it's probably up again. But the fact of the matter is I didn't sell it all. I didn't sell below my minimum. And I'm short real estate, which was the worst place to be yesterday, which is XLRE. So again, reiterating short the fur against many longs. Again, we have plenty of longs on the macro side. I think we're up at 28 or thereabouts on macro pro ETF asset allocations that we've made. What else do I got going on for you this morning? Look at that move index. It nailed it, 125. So of course we're gonna get a bunch of questions and other clients like, what, do they just ask every day about the thing that didn't work the day before? You get like 27 other things. They're like, what? They obviously don't know what they're doing, and I'm like, no, but my goal in life is to coach them to help them do what they're doing, so that they don't sit there and listen to Bozo the Clown Kramer or Drawdown Josh Brown. I mean, we can improve people's lives. It doesn't matter if they don't know what they're doing. We're gonna help them know what to do, right? So that's an important thing. So the thing they'd be whining or complaining about is my 1.5% position in BNDE, for example, which is what it is. A portfolio is not a portfolio. Everything goes up and down at the same time. You need some asymmetry in there. And by the way, just got surprised by what it did, the debt downgrade. If I knew the Fitch was going to do that, first of all, I'd go to jail acting on it. And secondly, that's all I have to say about that. What else we got going on for you this morning? High yield, as I said, has been a great short from the right spot. You'll notice on Asia, first of all, a bunch of buy signals, and India was the one that acted the best. So that moves to number 1 on signal strength, just above Japan. Don't lose your mind over it. I was buying Japan all day, every day for 2 days. You can see that in the macro asset allocation across 4 ETFs. We added 2. Now we're at 2 on INDA and INDY. India popped first, so that was up 0.7% overnight. So that gives it's very short-term signal strength, more so than Japan, but they're obviously all bullish trend, or I wouldn't be long them. Things to buy, like I said, Indonesia down a little bit here after being up, so that's how I trade around 50 to 100 basis points per position. If you don't want to do it that way, don't do it that way. And Philippines down on this dollar move has given us a buying opportunity on EMX China. What you should also note is that China goes to neutral today on the Shanghai Comp. That's interesting, right? I mean, what if China goes bullish trend, but the economy remains bearish trend? Well, that's because you got this government that's trying to manipulate the market, as they always do. Signal greater than the quad. So again, on the recent pullback, for example, I covered a bunch of FXI because it was down. Let's just start with that, and that's what I do. You got bearish trend breakdowns across Europe now. DAX. Obviously making lower highs here. So on bounces, that's where I'm going to come back. So you get a bounce in France after signaling oversold. You get a bounce in Germany after hitting the low end of the range. You see where the low end of the range is in Germany because I publish it every day. You didn't see it in France because they're pretty close to the same levels and directionally or the same timing. So deal with that. Obviously, I'd like to build my European short position. That's signal strength better than China now because China is neutral and Europe is, of course, still bearish trading trend across the board with a widening set of risk ranges, albeit at that, which is obviously bearish. And if you didn't know that, it's obvious to me. Silver, yeah, right there. That's the spot where you should add to it was yesterday. Immediate term upside, plenty of upside on that, in addition to gold, of course. Corn, look at all this, the move in ag this morning again. It's like the corn, the wheat, and you have some AI signals to buy that, right? The soybeans, don't you have that? The
Yeah.
soybeans? We're going to publish this
Corn
soon.
and wheat.
Yeah, I had butter. Butter and palm oil. I'm kidding, I don't have a signal.
I need some ETFs on those.
Yeah, I don't waste my time on. I do the research. I get to show people, but because a lot of unions eat butter. At one point the guy from Goldman Sachs, this guy employed to be their guy, he said something about can't eat an iPad. Just the arrogance of the old law. There's there's this, Nassim Taleb says this, he says, you think I'm arrogant? Like Nassim Taleb? Some people do. I don't. He's like, okay, I am. There's arrogance up and there's arrogance down. He's like, I'm arrogant up. Because he'll basically flip off anyone at Goldman Sachs or anybody in the establishment and like it. That's arrogant up. Speak truth to power. Speak truth to these elites. Somebody's parading around or peacocking around of how much money they got, and they got bailed out 6,000 times by the government. Be okay with arrogant up. Arrogant down is those people talking down. Now that is arrogant. Don't do that. Ever.
So that's what Josh was really talking about. It's a little bit what Josh is getting into.
Oh, really? Look. It's sickening. It's dirty. And it will be addressed. What else we got going on for you this morning? We got the 30-year yield too. That's another one. Pay attention. Write it down. 440 and 425. I want those lines written down. All right. We got the 440 and the 425. Okay. These are not highways in Ontario. These are again for the 30-year. That is the prior cycle high, and this, of course, is the cycle high in October of 2022. And both of those things happen at the same time. So again, looking for big lower highs. We'll have to see with the risk range. Top end of the range being inside of 10 on that. Bitcoin's acted like shit. Nobody talks about that anymore. So again, whether it was dot bomb or blockchain or now AI, don't forget there's another part of the story that is set here to play out, and that's something that we're looking forward to risk managing. Any good spots to take place. You were right.
AI. Dan Ives. AI.
On the sovereign CDS side, the U.S. sovereign CDS, the 5-year, basically nothing going on. I mentioned that before. But in all your EM countries, it's basically coming down off of its highs. So like your India, your South Korea, all this stuff.
And sovereign, can you tell people why we look at sovereign CDS risk if they're new to this thing out?
Essentially, it's your overall risk per country. The higher that goes, the higher you have to pay, right? You don't want it up, basically.
And it happens, in particular in emerging markets. But again, because emerging markets are emerging out of Quad 3 and Quad 4, their sovereign credit risk goes down. CDS is credit default swap. All right, what we got? We got some good questions because our new process on questions is really, I had a lot of compliments on that and being done.
We'll go to the first one here. It's loans. All right, been buying some gold on the last few red days, with gold making a higher low and the dollar making a lower high. It seems like a good opportunity. I will start selling some on green. But should I take CPI next week into account, or is it just noise?
No, it's definitely not noise. I mean, it's what you should stay with is the risk range regardless, and how I talk, and most importantly, signal. So again, that's going to be, I believe, in real-time words, having played some client golf yesterday, which I rarely do during the market day. Yeah, GLD, you'll know because it's in real-time words. So if I sell some on green, you'll know when I sell some. So I'll be pretty quick there, but I'm definitely keeping my core position. And again, just think about the context of these two, 440 on the 30-year yield, 425. That's the most important thing that I think gold's seeing. And it is what it is. I think that most of the inflation acceleration has been priced into bond yields because we're pretty close to the top end of the numbers. This morning at 420 or 419, I mean, you're like 2 basis points away. So again, understand that markets are very good at pricing in the future, and once you get to these calendar date events, they become, in some cases, nothingness, or what Mandelbrot would call Brownian motion.
got a question from New Zealand.
Do you want to impress your girlfriend? Start talking about brownies.
I build neural networks. I have plenty of things that
And you do. What does your girlfriend say when you say I'm building a neural network?
she's very impressed. I put it that way, but I mostly just explain it's a lot of fun. Anyway,
Yeah.
Good. Really, the whole concept behind neural networks is quite simple, and it's. I'd say she's impressed.
I love that. I love how.
I don't like to talk about it though.
You gotta be. I'm mostly. 16th wedding. You gotta be able to watch the times. If you don't, you feel like 50% of Americans have less than 70 grand at the household level for income. 50% even.
No, you don't. I'm more talking about the AI, about the potentials of AI. So like when it comes to like manufacturing industry, like that's what about how crazy our market is and how much I know about it.
I like that.
So
Happy
Ba 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 ba. Whoa, whoa, whoa. All right. All right.
it's true.
Okay.
That's a sick.
But my wife and I talk more like this. I don't talk like I have to present the top 3 things. I mean, that's like singing a song, you know. Or doing the rooster thing. I mean, she heard that. She might come back.
We might have a trip to Ohio State for in the near future. I think that's where we need to get you. We'll get to the question. I got some good questions too. Ooh, we broke the full circle here. Well, all right. With the quads oscillating between 3 and 4 and risk of a further credit event, how should we think about trading oil and other commodities as they do well in quad 3 but not quad 4? Signal and oil seems very strong but can't turn quick.
I would just stop thinking and just do what the signal's doing. That's it. You don't have to really. I mean, you can sit there and lose your mind over pretty much anything. A marriage for sure. Add on some factor exposures like 4 kids and a dog, and add in all of you, Italian nation. Hair can go white. I don't really have time to overthink my decision. Right? In fact, there is no need to overthink the decision. Just deal with it within the risk range. Why do you think I built these components to the process? Because they're actually the answers to your question. Is that we don't have to go to Boston and write a white paper on why we can stay with buying the damn dip in energy stocks and or oil with an oscillating quad 3 to quad 4 setup. There's just no need. Just stay with the risk range. That's the simple answer. As I often say, probably 80+% of answers to your questions are where are you in the risk range?
Yeah. And with that question, the commodity, I've been looking at the commodity. I don't know how much you've been looking at it, but
I look at what you tell me to look at. I mean, come on.
EPU, Peru.
Yeah.
That one is very interesting. Also the quad setup. That's right. I did look at some quads.
Yeah, the EPU it's got EPU's got some copper mining exposure stuff like that. That part I don't like. But EPU, the signal says buy it. Yeah.
And then maybe since you have it up, GXG, the Colombia.
Yeah, these are former shorts. They're sneaky good shorts. You know, like how you introduced the KSA on the long side. We used to be short the Middle Eastern ETFs. Now we would be buying them. GXG is bearish trade bullish trend, whereas Peru is bullish trade bullish trend. So go with the one, that is bullish trade bullish trend. Yeah, I like Peru. So there we go.
There you go.
Yeah. And these are great. Like these, especially for individuals and family offices, like trading these more what some would call obscure countries, unless you live there. Why not make money?
I mean, I was going to the quads. So basically, GDP for Peru is like about 1.5%. It's going to go to 3.44%.
Gotta be there, rooster.
Yeah. I'll give you some numbers. This is from Josh. It's very
EPU. That's brought to you by the rooster.
I think that's an emu.
No, it's Shibu Inu.
Alright. This is just a stat from Josh's early look. interest expense in America.
Can I take notes? Have you read his whole note?
Yeah, I read the whole.
Oh, let's do a review for those of you that don't want to read. And I've been told that too. I got told a whole bunch of stuff in Boston. Like one guy's like kind of closer to retirement, and he's like, I love like golf. I golf every day. I mean, all I have to do is like check the top 3 things, put in what I'm gonna do if I'm gonna be playing golf, and I don't do it till lunch. He's like, that saved me a ton of work. Man. I know I should read, but I like playing golf better. Thank you. I mean, he's so happy. There's a lot of happy people out there. We have changed their lives, and they're changing ours. That's a 2-way street. All right, let's write down some. Let's Steinbomber. For those of you that don't know, that's what my brother gave as a nickname. Okay? So his nickname, we give everybody nicknames. My brother Ryan calls Josh Steiner Bomber, so we call him Steinbomber. So here are Steinbomber's debt bomb notes. Okay, debt bomb, and I think that's about right.
Yeah.
Okay. Now let's just make sure that we have this appropriate colors for Janet, and then let's get some data points. What do we want?
All right, so let's put this one up. This is the projected growth of interest expense in America, up 202%.
For over what duration?
That would be 2022 to 2033. So it's about 11 years.
Okay, that's a lot.
Now your GDP is expected to grow 57%.
Into what?
With a growth of GDP up 57%, when your interest rate's going to go up about 202%.
Yeah, okay, that's what's expected, so we're,
Yeah.
and as he says, this does not allow, the government's assuming no recession,
Right.
no thing like a pandemic, no nothing, just.
Right, they expect everything's going to be beautiful. Everything's beautiful in the world, which it ain't. They think that's what they think.
Okay, so these 2 things he's saying have to happen at the same time. Okay, what else? You got anything else in there?
I mean, there's so much.
And this is on the what? So this
here's-
this GDP number will lead you to 47 trillion in U.S. debt. Right?
Yep, up from the 20 trillion that it currently is.
Okay. Just what's another 27 trillion amongst friends?
1 minute.
Just like as long as you're one of these people in Washington that came there as a millionaire and they're now worth like a couple $100 million, all good. It's all good. Just keep doing it. Right? Keep doing it. Nobody calls you out on it. J.T. Taylor said this morning that you will be banished from Washington, D.C., like Paul Ryan essentially was, for whatever party you're in, for even discussing the 3rd rail of the baby boom generation, which is, of course, their Social Security, their Medicare, all their benefits. So as they play this out and take our kids from 20 trillion debt to 47 trillion, and again, that's assuming with no recession. That's not a good assumption. So, and the answer is just keep doing more and more. It's the definition of insanity.
Okay, here we go.
Which is kind of crazy if you think about it. Because if you've ever worked in a manufacturing company, their data is awful. It's not good data, right? In order to have AI work, you need good data and consistent data. So,
Right, that's a big winner.
most companies you have your fridges like Amazon, don't get me wrong, but most of your companies in America, they don't have good data. They don't have good ways to keep up with it. So first, in order to implement AI, you have to have at least 2 to 3 years of good data. You have to build that starting today. And that's if somebody comes today to say you have bad data, to start building that, and then you have another 2 years to get your AI going off of that data. It's a joke.
So the duration, we call it duration mismatch.
Right. It's
It's mind blowing, really. How hook, line, and sinker people are on this. And by the way, when we look at this, Steinbomber's debt bomb, this is really America's debt bomb, right? So when we think about this, what do you think?
WJ.
Big AI guy?
Damn, we didn't get big enough in Japan.
Tell you what AI is gonna do is get the hell out.
Yeah, I mean, it's like that's the thing about AI is if AI gets closer to the AI that we've employed for going on 15 years in measuring and mapping things stochastically, letting the machine understand things fractally. That means that more humans are going to come to understand the rate of change math and the reality of these numbers as hedge risk management is outlining. That is so unbelievably bearish for these politicians, for these elite, and for the establishment.
Fuck,
There wouldn't
what
even
the
be a word.
fuck?
It's not even, they're going to redefine a word for bearish.
Oh, you
Are you
fucking.
bearish enough on that?
Yeah. Well, they get the whole conversation of who's building the AI. And what biases they start putting into it. With an AI that's completely unbiased, amazing.
Yeah.
An AI where it's built by your largest corporations and your government, they can make it say whatever you want. So,
Interesting.
putting that one out there. So, things to think about.
We're in overtime.
We're in overtime.
Do you have any other good,
Good data. You hit most of it.
any other good questions in the queue that we have? Let me ask one more.
Well, here we go. This is on FDRXX. Good morning, gents. I too stash a portion of my pile in FDRXX when appropriate. How do you assess the possibility of Fidelity or other large brokers going down? What would be your First Republic trigger? Can these brokers bail in from our stashes? Much appreciated.
Well, FDRXX, I mean, let's just start with what Fidelity is. Fidelity is not a publicly listed company. It's private. And the answer to that definitely shouldn't be there's no risk, because that's a ridiculous thing to say. It's something Rug Paul would have said about Ethereum or something, or about staking. Remember he said that? What an asshole. The amount of people that wouldn't know otherwise that lost their ass in crypto because of that guy. And he takes no accountability. Now he actually says, well, it was an options position. He's not the establishment. What was disgusting about him is that he actually at one point had a media platform that was kind of like a disruptor, but he just ended up doing what the street does, Wall Street does, old Wall Street does on CNBC, just took a different asset class and did it, and it's disgusting, it's embarrassing, and it's going to end the way that those things do. But, you know, what was I talking about?
FDRXX.
Oh, FDRXX. So saying that there's no risk in anything is inappropriate. But to say that I'm comfortable with the risk is saying something else. So for me, I got no problem. By the way, I used to have 70-80% of my portfolio in that on certain days into the right, part of the month, into the new month where you get paid. Now that's more like 40%, 50%, probably gonna be less, depending when you have 28 different things you can buy, and on the long side.
Fuck, everything's up.
So I'm gonna oscillate back and forth, but for me, I think that the risk is appropriate where I wouldn't have, like, I have a significant amount of my pile in that thing. So if FDRXX were to have some kind of like regional bank, publicly listed regional bank risk, then I would have risk that I currently am not positioned for. So I'm comfortable with the risks that I see. It's been a fantastic position for my family and I, and I'm going to continue to stay with it.
Yeah,
It's nice. It's really nice.
really, that's way better than 0.01%. But anyway.
Well, my wife was watching the show, I think, the other day. She reminded me just randomly, because I said I got the equivalent one at Chase or JP Morgan. She's like, you got the Citigroup one too, because we have 3.
Yeah.
We took all of our, because I used to be at First Republic,
Okay.
and I had
Okay.
Chase. And we were just like all in there. I also have Morgan Stanley here, so I got 4, but that's more for the trade. So I got 4 places.
Well, the idea is they're out there for every brokerage you have, like you can find these
Yeah,
things.
and I trade them actively, right? So I move my money around actively.
Yeah.
So if I see something that's dicey, and I don't know. I would look more for dicey from Morgan Stanley than I would Fidelity, but that's just me. Probably my bias, like I remember 2008.
All right, we'll wrap it up there. Thank you everybody for joining us, and happy anniversary to you. 60 years is a long time.
Thank you.
So everybody go out there.
The 4th.
It's August the 4th, everybody. I'm Ryan Ritchie, Pronunciation King. I'm joined live in the studio by Hedge CEO Keith McCullough. Tomorrow, you got any questions? Put in the comment section below. With that, Keith, I'll turn it over to you.
I love it. You weren't on the Mountain Dew last night or what?
No, not last night, but the previous week. I mean, I was sleeping in the office. I mean, it was quite a week. But I had some sleep, so I'm ready to go.
I love that. And people love Rooster. I was in Boston. You know, when I was parking the car, they're telling me, who's that guy, Rooster? Where'd you find that guy that does, like, did he used to have a job, like, doing roadkill? And I'm like, hey, so Rooster, you got a lot of fans. And I just used a nice gift there. I used to, this is a little known fact, but when I used to wake up the boys for morning workout, like, you know, in the hockey house, I used to live like
I haven't been there, but that's on the list.
all right, top 3 things in my notebook. Number 1, this morning's going to be
Okay. What have we done today?
Number 2 is going to be interest rates, and then, of course, we're going to hit on the SPY. And Rooster's AI.
We have sold a shit ton.
Now, I'm not long the SPY, but again, I'm not short the SPY, and I wrote about why I was buying things, which we'll get into. But first, if you've been long oil and or energy stocks, well done. Okay, so every single day at this point, you have a higher low and a higher high in the risk range. Every single day that's been perpetuated by an oil volatility signal that, again, is bearish for volatility but bullish for the price of oil. So oil volatility, as you can see, is now in the high 20s instead of the mid-30s, high 30s. 33 is the trend breakdown line for the vol of vol on that front. So again, this is just bullish, and it's also hawkish in terms of inflation. Again, reaccelerating. We have that. Don't forget that CPI is coming up next week, which makes this setup to get longer here a little dicey, right? Because of course you go with the unemployment Goldilocks type report here that takes bond yields down a little bit to having to deal with that next week. We'll get to that. Again, play the next play first, but you know, inflation's obviously reaccelerating, and you have sovereign credit risk, so that's busting a move on point number 2 here on interest rates. Those two things at the same time. Not very many people are portfolio prepared for something like that. Again, for a long time, people didn't think that there could be credit risk. From here, I actually don't think that there is on the sovereign side. I think that there's plenty of credit risk where we've been shorting things, high yield and junk in particular, which have had a fantastic, I don't know how many more times I'm going to get a chance to short this thing, but I've shorted junk many times, HYG many times. They too are at the low end of the risk range. But again, that's what I'm going to be looking to short is the credit risk embedded in corporate America, which will not get a bailout. Of course, the U.S. government's going to bail itself out and bullshit everybody about their actual
Amazonda.
which Josh Steiner wrote a great early look, according to you. I've not read it yet. I was doing other things, but I will read it this weekend. Anytime Steiner goes off on something with data, you want to read it. Okay, so that's point number 2. And again, looking at what I just said there, if you pull back on interest rates and you just look at the 10-year yield, 4.25, 4.25, 4.26%. Is a very difficult spot to get through. If it can get through that, that would be higher highs. If it doesn't do that, it would be lower highs. And if it makes lower highs, you're going to see what gold just did, which it went green as soon as bond yields tick down. Now, I think gold has actually done a great job hanging in there this week, given that we've had a monster move in real rates and
Valvoline.
doesn't like that typically, but it hung in. And for our top position, which is currently my number 1 asset allocation, I was happy with that, even though I'm not supposed to have any feelings. SPY. Do you feel like you need to hedge after things happen? Well, if you do, you're just doing it the wrong way. Now, I got plenty of clients saying, Keith, I can't believe, you know, that there's not more downside from here. And it's like, there isn't. I mean, I wrote it, I said it, I executed on it. Again, if you can't get the ball, the top end of my range on the VIX in particular, if you can't get that to make higher highs, in fact, it just made a lower high at 1654, then my risk range on the low end of the S&P 500 is going to come up. And it's come up pretty much every day, every week, and that's what it is. If you can't do that yet, if you cannot trade both sides of the game because you're fundamentally bearish or fundamentally concerned about U.S. debts and deficits, you got to get fundamentally better at executing against what's in between those two things, those two ears here. Okay? So that's a real important thing, is to be able to trade the tape both ways, risk manage your book. So for example, today, I'm 13.2% net long on the open. If you go back to the beginning of the week, I was like 2.5%, almost 3% net short. So that's how I do it. How you do it, totally up to you. But the signal's a signal. After 3 down days, you have a 74% implied volatility premium. So again, people got spooked. They bought short-term protection after they should have. Next time the VIX is at 1321, which is along the range, buy yourself some protection and go the other way again. And those are your top 3 things. Easy one to understand, right? And now when the AI goes both, again, the AI signal is super short term and
Okay.
again the trend.
I'm up 65 basis points, and the S&P is only up 53.
At 46.23. Trend bearish. You're at the low end of the range. Rooster signal on the AI signals that we built. And we're building them out for everything. Incorporates our process, the fractal orientation, the mathematical construction. It's all. It's a very short term thing. So again, it can say buy because that's what it means. A cover order is a buy order. Okay, you got it. You got it. Hey, look at how good our community is. Look at the anxiety. You gotta be somewhat happy with that. I'd say that people are really dialed in. I mean, they know what to buy when there's a dip. They know to buy Japan. They buy India. They know what to do. They know these Hedgehog Nation faithful. They're well. Oh boy, they're back. You guys remember this? You know the guy who did that. You do? Yeah. Who? It was Mike, but do this one. Barry Bond. Got my name on it. Put my name. Pretty cool. I was talking about bonds this morning when Todd Jordan, for those of you that are along the DraftKings, how about Meta? How about somebody?
What if you could do SEO
Oh, no.
faster? With Wix, you can edit your meta tag.
But again, sometimes I compare my earnings to like Snapchat, but then like I could compare it to like if you compare yourself to Redfin, like after your rent, after your car payment, after your student loan, after taking your girl out and all that, you know what I'm saying? If you were left with $1, you made more than Redfin. So there you go. Lost 5 mil, you still made more? Yeah, technically speaking, correct. But even if you lost $4 million, you still get better. But at that point, it's still like, I'm like, all right.
MGM trying to join the party.
4524. Man, we're still at this. Dang, that's crazy. We didn't even get up to here yet. Oh yeah, so this means not only did I tell you watch the bonds, but until we get up here, this means nothing. So you have to get above 4, just like yesterday. Hold 4,500, you'll get your little baby rally. Hold 4,540, you got bullishness. Otherwise, if bonds come down by any time in this day and that don't hold up, we got a problem. Averaging down on the ANET? No, wait. That play, again, we made it free. I'd chill though, but if you want to average down at the last second. What I'll tell you with that ANET contract, there's chances are when it's time to average down, this is gonna go up. So like, or what I mean is like, ANET will go up like $10, and that contract will not move. That's the day you're gonna want to buy it, not today. But what I'm saying is let the momentum shift and let the contract start turning. But if you're in a far out the money with this short amount of time, that's not going to hit gains till later. So in a weird way, you could wait till the momentum really starts hitting. And this is my assumption. I could be wrong. So monitor the contract. But even then, I see it as a low probability play. So I'm not trying to chase it. After realizing 2,000%, my only risk I'm willing to put on this play is $75. So whenever it turns up, I'm feeling when it gets to the high 180s, 190, it might start to wake up again, and those contracts will still be dead. That's what I'm going to look for. But even then, take into account what I said. I'm still in Rite Aid, yeah. I mean, did you hear my first plan with it and like any of the prices that I said? Again, I know my plan has not changed. So watch list here if there's an update, but $3? Okay, so that's why I asked me again. Thank you. $2 rad. There you go. So there, I'm saying, otherwise, you see what I'm saying? Otherwise, there's no point of disclosing a plan if the plan is not. You know what I'm saying? Because I'm just saying, you all know. I've told you, that's a very risky play, and I feel a certain way about it. But it's like I'm trading it a little different. But I don't like the emotion fees and the fees and the every time $1, $2. But otherwise, I'll just tell you, I don't know. Payrolls was decent. It came in lower, unemployment dropped, and then prices went up. So I think it was borderline bad, but in the sense that it's better than going at 220. So the two elements were bad, like unemployment and the other thing, but overall, most people thought it was going to come in a lot hotter. So in a weird way, it was a little better, but I'd say just overall mediocre, nothing really. Because again, CPI next week. This is what I was saying on the watch list. This is why I was like, I won't even. I may not even be live with it in the morning. I have not looked into them. That one could be an interesting one. MP exploding materials or MPW? MP. There you go, 6.5 on the high. MPW's coming up. High plays chilled out. Rad, Tupperware, Yell. They ain't really doing anything here. Again, I do have Apple and Amazon. I think that's what's kind of getting in the way. DraftKings going down. They give up about like 4 or 5%. What about Booking? Redfin, nah, still dead out below. Airbnb too, they got me on that contract. Hello, Habibi. Lancer, PayPal at 63. Bond's still going. That's good. This is healthy. I'm telling you, you don't. Bro, I don't know if you noted, dude. The trade stuff yesterday. You got them talking about steepeners. If you listen to people this morning, and it's been 3-4 days of this, like I told you. A lot of people thought I was an idiot for buying the 2-year. We just protected ourselves from the fucking blowout. But everyone's freaking out right now. So if the bonds don't die, that's a good sign for now. But that's why I'm thinking we got to bring it into next week, if anything. See, Rad Breakout. I just looked at it. Yalla. We got scammed on Kubo.
Hey, I gotta make some coffee.
So we're good again. Remember, we already hit high on this, but you should, if you did the average deal, you have a nice bag. I don't know how, that's 20%, a little more. I did not grab another one yesterday, no. And I tried, again, like I'm saying, I want people to learn from it. I'm not really trying to be an asshole, you know, just when we start over with it. So I did on the watch list yesterday. I wanted to clarify, and I said what play I bought, what play I'm holding, what I plan to do on it. So I didn't do anything today, but I'm in the 2-year, and, you know, just try to stay up to date at least once a week on a watch list. I might give you an update. Otherwise, intraday, I don't like talking about it, because even yesterday, the bond, it's just too much volatility, and I don't like starting over every single time with it. But 2 years where I'm at for now, but I plan on moving to other ends of the curve. And I did drop another theory today, which I'll put on a watch list, but it comes down to next week's auction. Yield curves finally click. I think it will. That's what I was saying. I was glad after yesterday's video, because now after seeing just a couple of moving pieces and putting them together, things should add up. Again, the yield curve, short the long end, buy it. You see how it's moving, all of that. But you know, some of you guys who have been following along, you will start getting light bulb moments very soon if you haven't already. XOM running. Rite Aid's going crazy. So there you go, 280. Manipulating Airbnb. I think they're just, you know, hedging the risk Everybody's selling their property. You know, Amazon's even coming down. I thought, dude, I was in the shower yesterday and I freaked out. Okay, just one more. One more, I promise. My last one. One more, I promise. But I was in the shower, dog, and it dawned upon me. We didn't even realize it yesterday. But I was like, bro, if everybody stops using the internet, Google is fucked. Uh-huh. I know. So then I started thinking, I was like, oh no. Oh no, bro. Yeah. Uh-huh. Yes, 5 big reds. First one, finally. Again, it was just, what, 20 minutes here? I mean, it was just straight green. Yeah, Airbnb's clapped. Again, they got me. Again, look at those calls now, though. Now, if you could, wait till those calls go to like 15 cents. That'll be a frogger. Later in the day, if you get anything up. DTC on the high? What's this? Solo brand? Why does it sound so familiar? So I took off Radical. Radical looks nice. I don't know why it's going up like that. I don't even think Top and all those other ones are just up. So actually, I think the Rite Aid's catching up with them. Yeah, because those are all up 20%. Rite Aid's up only 9%. Oh, yes, baby. Ladies and gentlemen, boys and girls, on Friday, non-farms, you had downgrades, you had Apple, you had Amazon. And now you have Bradley Frizzle and the Peach on a Friday. Let's go, baby. Or nah. Peach Nation, get your ass up. Your Rite Aid's ripping. Get up. Okay, damn it. Damn it. No. Okay, we're good. Amen. That's what I'm talking about. That's what I'm talking about. Let's go. God bless you, Bradley Frizzle. It's AAA rating. That's it, bro. AAA rating, dog. They don't understand. AAA rating, consistent. I'm just saying, bro. That's that. Here at the Co in Chattadonia, we use the Frizzle Peach. That's our credit agency. That's our backdrop. That's how we know if you're AAA rated or not. It's triple peach rated, actually, because we're looking at how many peaches you've been given by the Frizzle Association, and they'll give you the rating. Because I'm just saying the backdrop is compared to a great role model. What's your take on me buying TLT with 2 or 3 year horizon? It doesn't matter, my take. Again, I mean, why do you want it? But you have to understand this. I don't know if you were the comment on the watch list yesterday, because I was going to explain it. Everything right now is your decision. This is why everybody's freaking out. You see what I'm saying? Because a lot of people have made these decisions, and they're starting to make this decision, but it's doing it at a very, very big inflection point. So here's the deal, because there's a logic going around, and somebody commented this on the watch list. They said, why don't I just buy TLT, collect the 3% dividend, 3.2, right? And just wait until the next 2 years until there's a pivot, and then when it is, I'll make money anyway. Even if it's down, I collect my dividend, and then I can just sit there. So you absorb any bond loss until there's a cut, and then boom, it rockets up. Have any of you thought of that? Because this is what people are talking about. But literally say, why not just buy TLT 3.2 right now and let it sit and hold it? Yeah, sounds like a good idea, right? You like it? That's what people are talking about. But here is what it does kind of make sense. But I want you, I hope I can educate you to understand what's happening now. People see that same trade. The only difference is, if this shit breaks right now, you could go in a month, 30 days, 2 weeks, you could make the exact same trade, but instead of 3-1 dividend on TLT, you're gonna get 4 or 5. You see what I'm saying? So it's like buying.
Oh, where's the S&P going?
Knowing it's about to have X dividend. So yeah.
Did I sell the AMLP? Oh yeah. Hell yeah.
This is why everyone's freaking out. Because if you make that position now, then there you go. You're saying average down, but do you realize this is how motherfuckers have gotten blown out on the bonds by now? Is if they were thinking too all in. So if you're like, okay, I think it's 2 years out, I'm going all of it today, and then it blows out, you're still gonna get your return, but now you're getting half as much as the next guy who takes that trade a month later. So that's where people are playing this little game right now. So it's a catch-22. That idea is a double-edged sword, because at any other point that you've been there, you could have said the same thing at the beginning of 2022. You could have said it after Burry covered his short. But then again, you just missed out on 100, 200% of interest that has gone up. That's the crazy part. So that's why I think averaging in is more appropriate, but all I'm trying to tell you is that just be careful.
Closed my long euro dollar trade.
If that changes in the next couple of hours or days, it changes the whole risk reward. It's the difference between great positioning or being underwater and then having to wait. So I think, like I'm saying, I think a little buy 3 times, have enough. You're not allowed to, if you're going to any bond play, I personally do not believe, I don't think you should go all in on one of them, because you're going to get murked like this. The brightest minds in the world have already done it. You see what I'm saying? You don't lose, it's less. Well, I mean, yes, but what I'm trying to say is that this is the same logic that wound up the fucking banks with problems with held till maturity. So I hope you guys recognize what you're telling me. You're saying I want to buy a 20-year, 30-year bond ETF with a low yield and hold it till rates get cut. But if in the meantime, in those 30 years, this next 2 years, 5 years, you could get blown out on the unrealized loss. Is what I'm trying to say. Or that even if you wanted to trade,
Okay, what else? MGM. All right, we dumped all that. Yeah, we're gonna trim. We're gonna trim big time. So we're just gonna get out of a lot of stuff.
You had your hero story this morning, 4 a.m. The car in front of you flipped because the guy was on a bike and swerved. You tried to get him out but couldn't. What? Damn, bro. They do like, I made money on bonds? That's crazy. Did you save someone's life today? Oh, man. Crazy, bro. Dude, it's a wild experience. Hey, man, and Chad, I tell you, we should just become superheroes. That's it, bro. We could just make our little Chad group. We could patrol the streets just looking to save people. That's it, man. I think that's some Batman shit. I'm down. Monster Elliott Management, MNST. Oh, Monster Energy. That could move it. Hey, yo, check it out because they're at the low. So wait, you're gonna have to verify that there a little bit. It's probably on Twitter, but activist stuff could move it, and they're really down right now. Canada PMIs just came in. It has to be one of Edgar's sons. Anyway. Starved. Ukraine State Gas Transit says Russia
South Korea on sale again.
Apple overall, I don't think it was bad, but it just also, I mean, that's an Apple recession. That's 3 quarters in a row of declining revenue. I mean, in growth, they did good on. I like services. I don't think that China. I think they have $20 a share from last quarter on China, and I don't think that came in. But at the end of the day, it was enough for what it is now. But overall, I thought 1-2 quarters ago Apple sucked, but then it's Apple sucked, and then you also see the market. I think Amazon though, and I say this with a short because of that play yesterday, but Amazon was beautiful. I can't get around that. Amazon was like, that was clean. That was just like mother effer. That's what they were supposed to do that 1 quarter, but either way, like that's the report we want. Like again, Amazon was guiding up on shit nobody was even talking about. So again, Amazon, I don't know if this is new. Airbnb maintained that neutral Credit Suisse 165 target from 120.
I chose St. George's University School of Medicine because at the time that I wanted to go into medicine, they were the only university that was willing to give me that chance. And I wanted somewhere that I felt believed in me. And from the beginning, even when I was accepted into school, it was very clear to me that St. George's wanted me to be there and that they believed that I could and would finish medical school. And here I am today.
There's so much possibility to exponentially grow. Like I'm about to re-edition and I'm going to spend $200 and then I know I have the opportunity to scale to a $50,000 and then a $100,000 account from only $200. Where else in the world can you have that kind of opportunity?
In terms of guidance and what they can produce, but I like Amazon. I think Amazon, but I wouldn't buy it. That being said, and I think that's a good place to be at because it's good, but it's not. I don't think it's a good purchase. Morning, started my long term, just maxed my Roth RAs. Let's go, baby. Long time Twitch subscriber. Let's go, Kyle. Stay free, baby. 17 months too. Let's go, man. Honestly, I'm very proud of you, and I do know that's one of the best decisions you can make. And you're gonna for real see what the stock market means to you, because you're not gonna be a tourist once you get a long term. I say anybody else, you don't have a long term. You've been trading 1, 2, 3 years. You don't got a long term. You're a tourist. I promise you. You know, maybe you're one of those nomads. You'll be here for a couple years, but I'm just saying, long term, baby. Long term. You're gonna see what it brings you. You're gonna see what it brings you. Numbers was employed. It dropped to 3.5. So it's weird because the job numbers were lower, but then unemployment went down, and then prices, wages went up. So stocks going down, bonds going up. I don't have any problem with this. I love this. I'm just telling you right now, this is fine. But you're dropping now. You should panic more if the bonds go down. Believe me, for now. So this is giving you an opportunity to close some of the gap, like what happened last time. And again, at least you're watching equities move, but you're not watching people freak out in fixed income. Would you max your Roth over your 401k? I talked with the tax professional, but I would say so. But then again, too, it also depends on how your employer matches. So if you get an employer match, you know what I'm saying, for the 401, bro, run them up. Honestly, all of you, if any of you have a company that offers you employer match on your 401k, I do hope you're maximizing it and like doing the total maximum of it, because that's free money from your job. I know, like you should like make sure all of it. Yeah, they match it, and then if you also get like purchases on the shares, do it. Just don't forget about that. You know, like, so I think Boeing, even, that's another company, they'll offer you like a 5-10% discount on the shares if you want to buy from the company. So yeah, run that up, baby. Jobs data was mediocre. I mean, it was in the sense it was better than not because it wasn't stronger with some of the little information on it, like the prices and the unemployment number, the rate. That is what was negative about it. But for the most part, we would have dropped way more if we had a 250,000 job report. So in a weird way, unemployment rate shows better job market, but the NFP didn't come in that strong, which I think gave us a real neutral spin. What kind of indicating slowdown, recession? I mean, yeah, a while ago, it's just not good, but then they came in with China. They're holding on. It's not like is it a slowdown from the peak? Yes, but is Apple slowing down like it's like crashing? No. But then again, that's what people want to see. And bro, you're taking another dump right here, man. You're hitting another low. You're back below, bro. 4,500 gap filled now. That's crazy. That's it. Non-farm's gap has been filled. That's actually wicked. So now, actually, no, a little bit more. You have till 44,840 on the SPY. So again, but you just gave that. That's real quick. But bonds are still up. So that's. I said this from last night. I said it from the morning. I feel comfortable about this for some reason. At the very least, your bonds are not peaking out. I don't even think this is that serious. As weird as that sounds. Let's see, limit. Amazon's holding. Coinbase came down. We're back up on the Coinbase. MES. Oh, not gonna lie to you, man, I forgot about that one. It's down $43 actually, so not bad. And bonds dump. We're screwed today. I agree. Because then, if you mean to tell me we're negative, going below 4,500 in the levels, and then you give up a 0.5% bond gain.
Oh, but where'd all my gains go? Fuck.
After all that's telling you the market is high. That means nobody's listening. Like, that's what I'm trying to tell you. Is that if at one point, if the bond just keeps doing something and then selling off, it means either no one's listening or the supply is so high it doesn't even matter what happens. But that's why the bonds will just get murked and murked and murked, and then eventually it just becomes unavoidable. You're running really fast on the rates. That's the thing. You guys got to realize, what was I telling you the other day? Remember, I was giving you a little pin, and I was just saying, hey, it seems like the United States, like our 10-year, every time we hit 4%, something happens. It's like an upper bound, right? Well, look, we already hit 417, 418. So you've ripped through the upper bound. If this was an upper bound, your last defense is a quarter, but it's just showing you, just like in Japan, once it runs through 0.5, it starts to go insane. So that's why this is such a key right now for this week and where we move forward. You know what I'm saying? And then, again, in the background, I love you dispassionate, because you're even bringing up there's 5 things going on now. There's even the Japan stuff. It's one thing to imagine if Japan did it, but it's like we are also on 1 week off of Japan doing something. And you'll notice people are now, they implicitly say YCC is exited, even though a week ago they're saying that wasn't the case. But that's still going on in the background. But for the most part, just like very quickly, just here though, it's like if we start ripping past this and it's not responding to the data and all that, it's either nobody's listening and there's a bigger play, or it's coming down to the supply. But once we are past these rate levels, it starts to get really loose. It's like a squeeze, if anything. My main ticker, I look at the bond yield itself, or I look at IEF, TLT, and SHI. You guys watch me do that a lot. It's like I said, it's not even like anything too complex. Airbnb coming up. They murked me on the contracts. It might be done for a double dip. Like I said, did those go to 15? That might be the Frogger. No, they went down to 40. Scammers. The spreads are wicked. bond futures. I play the bond futures. I do, but I go off of. I don't know what I do. To be honest with you, I look at all of them. I've never confined myself. You know what I'm saying? But it's just at the end, none of it matters. Like the ETF, the future, it does not matter. What matters is the rate, what's being offered, and how people buy and sell it. It's the bond market. So you notice like, yeah, there's certain trends and other stuff, but we're focusing on what is fueling people to buy and sell them, and looking at how interest rates affect the economy. That's why sometimes the analysis is very helpful, and sometimes it's not because it's so broad and big. So, but other than that, like I take into account everything, and I do trade the futures when it's time to make a play. But as far as monitoring them, you use ETFs, you use all that, but just as a reference, there is a reference rate. You go check anywhere, go check 10-year bonds. Even government websites, they will have the yield, and knowing that yield and how it works and the events around it, that goes a long way, as opposed to the vehicle doesn't really matter as much. Boeing, I think Boeing should be down. That's why I'm still short on it. But I think if it holds 230, it has a lot of upside. Airbnb will go up. I don't know. I think the earnings was good, and then any other travel sympathy, like you went down in travel if you missed. They didn't miss, and if you did good, you went up 3 to 11%. So I think it's just gonna move around.
Yo, what's up? Are we loading up on Real?
So it's not
The Real?
You think I love Airbnb?
Anyone? The Real?
Played the play leading into the run up. We got 100% on the calls, sold out. 50% on the push, sold out. Everybody got cucked playing the
Cucked,
play.
bitch.
And now with all of the premiums slashed, I'm just going for a play that's cheap. So yeah. Habibi. In my portfolio, I believe I have more than one wife. Okay, Habibi. That's it. I have an Avivi, I have an Airbnb, I have a JP Morgan, the NPW, I have an Uber. I don't believe in one for the long term. Sorry. So in the real life, yes, but not for the long term investment or diversification. Habibi. Sorry.
Habibi.
You're concerned with my
Habibi. Habibi.
We're talking, I'm talking an investment, but I feel it's coming back up.
Oh, word.
It's every vibe, very nice.
Hello.
JP Morgan is very good. He is hungry, he is buffet, huh? The buffet. Good morning, folks. Alright, man, so listen, just like everybody else, you're allowed to stay in here if you contribute normally. If you're gonna spam and be weirdo, it's not gonna work. We already know you got the account set up, so just interact normally, have a good time, because you love beans. So that's it. Otherwise, it's just back to everything else.
ARKK, what up?
I've gone through it several times. Happy Friday, baby. Analysis of gold. I think I dropped a gem on you earlier in the day. Again, just what's going on with the yield curve. It's not good for gold, unfortunately. You see, that's what's happening. Like you literally have people not changing short-term inflation expectations, but they're selling off longer bonds. So in a weird way, it can hold gold, but it's not necessarily the best for gold. Am I holding RAD? I forgot, honestly. I don't know. PayPal almost at our first we'll get it later. Everyone blessed. No. Having the real conversation.
Sling it.
Talk stocks. Don't try the weird nice guy act. Don't work with your subtle flex. That's
Fuck.
gone, and then I attack all the other ones from your accounts. So thank you. God bless. MF, did you run it?
Okay, alright, we're in ARKK.
Second hold up. know I have one idea, but it's not there. It's not there. Logan, no BS. Well, thank you, man. Honestly, I appreciate it. You do not, because I hope it doesn't get in the way of the good ones, you know. But hey, man, I'm ready, dude. I'm excited. Like, I don't know. Like, there's a lot we have, so I'm very excited. And I'm excited to share it with you guys. And people learning from it and benefiting from it. And then you've got your long term, too. Ooh, it's beautiful. Beautiful. Miss Fresh. Wow, Miss Fresh. Oh, like, perfect. Roof is dropping. Tupperware now. Uh-oh. Are they going down? It's all the hype play. Where's Rad? Where's Radical? Nerdy pop in. Like Disney jump. But there's no Pfizer for long-term. Sorry for repetition. No, that's a total. I feel on that one. I'm waiting. It looks good. I brought it up the other day. Low key, it's already flashing. Does that make sense? So like, just to tell you, last time I said, it's like Amazon and Nvidia, they were flashing red for me in October as well. But then I kept buying other stuff. I'm a cheap ass. You know me, right? Especially if I already got something. Does that make sense? I don't know about you guys. I'm not greedy like that. Like, you give me one good play, you give me my last 4 just went green, I don't need to go crazy. But that one's, Pfizer is flashing red, but I also think you could get 10% lower. So I'm being greedy with 10% low, but I do think Pfizer is at like it's low level, solid dividend, not high, not low. This company's never going anywhere. You know, Pfizer has a better chance of getting me banned than them going bankrupt. So I'm gonna invest as a hedge for society. But I like them. I like them in that it's a boomer company. Every rich person in the world owns them. Biden owns them probably. But I like it. But I think $32 you don't lose. $31, $32 you don't lose. 35, I think you could start a good entry. But I like it. I do. But I'm still waiting. Unfortunately, fortunately. So that's either gonna help me or hurt me. So not a recommendation, do as you please, but yeah, can't lose on the 32. That's what I mean, just think about it. There's some prices where like you get them low enough, you're gonna have a bulletproof, or it's gonna be so much easier to build a position from there or not. Which again, even Pfizer at 35, I think you could build around it. You know what I'm saying? Like again, 10% lower. That's what happened with 3M, and then we went positive on 3M. So, but like I'm saying, it's not. I wouldn't avoid it, but I also, it's like a little more, I don't know, man. I want the extra for some reason. Merck, I don't feel the same way about Merck as Pfizer. Pfizer's a behemoth, dog. And so is Merck, but it just, I do think.
What was I gonna do? I don't know.
And then Merck is just way too much premium. You know what I'm saying? I'm not, you're high up for the last couple of years. Pfizer, we're getting it on like a decade. You know, staying in. Double down on Disney and PayPal at the right time, but I don't think we need to force it. Disney, you still need to get the earnings. PayPal, we're still green on the way, believe it or not. That's what I'm saying. Get a price you can't lose. You're gonna have really good defense. So believe it or not, our PayPal is even if it's a little bit, it's still just a little bit green. But that's why it's going for a price. And even then, the price I bought it for. Every day I bought it at that price, you get 100 chat messages telling you it's capitulating, dying, yibbity yabbity boo, right?
Yibbity yabbity boo, baby.
You make the money on the buy there. Just buy them. I would be down to arbitrarily buy, but like I'm saying, I'm 90%, 95% invested. So for me personally, it makes a lot of sense to wait around for good deals while I get 5% on my cash. And while I'm 95% invested. You see what I'm saying? So I hope you guys understand that. There's a reason why I could be painfully patient. I don't know if you realize that. So if you start seeing me stack up cash or even buy anything, but like this is why when I'm saying I'm like I want these plays cheaper, like I hope you realize that's my situation right now. 5% cash or less right now, all the way invested. Is like, and we could wait for these deals because I'm cool with getting yield on a smaller amount of cash while the rest of the money works. Fed Goolsby says we don't think Fed downgrade will make much difference. But yeah, look, so we're still positive. My $11 on PayPal. But that's what I'm saying. It's just I'm down to buy more if it goes, but it's just like I always said I was gonna wait. I didn't buy more at 59, so what I'm just gonna wait. So now that's why you don't want to buy the price. Our pain starts from here rather than any other point. So we do our thing, be patient. We're gonna get good average down. But like I'm saying, we don't need to rush them. Let them do their thing. Again, we were early on we were the first ones to buy the dip. So we could be the first ones to wait around as well. And that's why you should have a good setup on the long term. Bro, we're coasting. That's it. That's why don't get clapped on trades or really hone in and make sure your trades are good, because we're in a very unique situation where we could coast for a couple of months and let the opportunity come to us. It is valuable, but it's also the position put us in. All I'm saying is we are the sniper on the top of the mountain. Why would you come down? That's all I'm saying. I got this cash, I can buy a lot of stuff, but we have very great positioning and leverage. You see what I'm saying? How we are positioned, it is very hard to get us now. Did you see what I'm saying? You have to bring down a lot of the market to start hurting us, and then if we have the cash, you're able to bring it in through there. And clap off the trades. I know, but so why were you, bro? I banned your other account because you spent you were spending 45 minutes just typing it out. So I feel you, but for your good and just the sense of spam, don't give it that much power and keep reiterating it. If you want to make a good trade, you want to recover, I got some ideas for you. But I think it would require taking a break and setting aside a certain budget. But otherwise, I will ban it. If just complaining about doing good or only flexing good, then I gotta clap it, my friend. Again, and even for your own good, I don't think it's gonna help your trading. Staying in a trading room typing about it. For real. Because, if I was by myself right now, no one would know. I don't tell people. And I wouldn't either. I would actually just look to get a trade on there. But I'm spending personal time reveling.
I'm up 68 basis points.
I caution against that. It's a waste of time.
Just clawing back what I've lost the last 2 days. I made a shit ton of money in Amazon today. Sold an Amazon call for 140%. Unfortunately, I had more, but I sold those yesterday before the close, so I didn't make as much as I could have.
You give me something serious, a real conversation, I love you. I'm not gonna give you any shit. Anything else, I'm either gonna give you a warning, timeout, or ban you if it's not there. And I don't feel like an asshole about it anymore. And I think the chat can agree you look like the asshole. But so just very simply, give me something serious, or hype play or anything, call it out and tell me why. If you want, I will talk to you seriously if you talk seriously. If not, I can't give it to you like that. I do like AAP, but I didn't look into it yet, and unfortunately. It seems like I don't know something about it. Remember, that's it. It seems too good to be true, to be honest with you. And I feel like I'm missing something. So I have another play like that. I have another play today. I haven't made it yet. I'm stalking it. I'm stalking this play. And I feel like I'm missing something about it. But because it just has so much value. So I haven't looked into it, but again, if you know more than I do about it, let that guide you. But if something's going on with it, we looked up some of it. I like the value. It's bargain bin, but there might be something we're missing. But it's bargain bin for sure. My big trade idea, I haven't said it yet. I'm not going to tell you. It's not there yet. If it's there, I'm taking it. If it's not, I'm not. But if it's there, I'm throwing 50, 100 grand at it. And it's not Berkshire Hathaway. What's it have to do with? Paying attention. Don't worry. I get it's not. If it's there, we have nothing. If it's there, we have something. So you'll know at the right time. But I think I missed, and I'm excited, but I need to find the counter. But it's funny because AAP reminded me of that. So you literally, like, if it's AAP seems like there's deep value, but there's something like, I don't get why it's trading at such a deep value. I know the news, I know some of the reasons, but it's like, it doesn't make sense. Or it's like, it's just suspicious. You know, it's like when a really pretty girl talks to you. That's it. Like a super pretty girl, like she's hot. You know what I'm saying? Got a good personality. She even got a good job that's not OnlyFans. You know what I'm saying? And she's just like, and you like hella confused because you like, bro, I'm a 5'6" lizard. This never I'm speaking for myself right now. You know what I'm saying? That's how I feel.
Hey, yo.
Like AAP and the other one that I was referring to, I haven't disclosed yet. But it's just like, it's like you're like, wait a minute. I'm like, I'm down with this, but it's like, it's suspicious. Why are you talking to me? Hold on. This is not. So it's like, it's just suspicious. That's all. That's all. So I'm like, I recognize the attractiveness of it and all of that, but I'm like, wait a minute, why? Why are you?
So basically, we are at the point where we're gonna get like sector rotation. I'm pretty.
I like where O'Reilly is. That could be the case, but then that's like.
Think.
I just say the management argument is just fucked. Because you realize it's invisible. It's like, so it's like,
So you got all this growth selling off right now over the last couple days. You got all this growth selling off, and then you've got the resurgence of inflation, not in the last like 2 days, but over the last couple of weeks, really. You've got the resurgence of inflation as evidenced by the 10-year yield going up. It did get to the 10-year yield did get to very overbought conditions. And by many mean reversion technical tools, it was certainly overbought on like medium and kind of long-term, short, medium, and medium long-term trends. I think the 10-year yield, I don't have the longest term trend on my screen right now because it just kind of messes things up, but I would imagine the 10-year yield longest term trend. Well, I don't know. I don't want to speculate. I don't know. Let's find out. I wonder if I've got that. I wonder if the 10-year. Oh, my screens don't even want to show that. I don't know. Alright, I don't really want to worry about it. Oh, I'm up 72 basis points. I'm not really looking to get long the S&P or the NASDAQ right here. I do have long S&P calls in another account for like 2 weeks from now. They are the 451s, and there's a good chance that I'm going to get them because they already were in the money today. So that's cool. Because I saw this looking at the implied volatility premiums or discounts. You do see that the S&P has like a strong premium for implied volatility, meaning it's like super expensive to bet against something. So it's like, then bet with it. And so that meant calls, and now the S&P 451 right on the money. But I actually think this bad boy could rip at least to 455, the S&P. All right, yeah, I think it makes up this gap. That doesn't mean it'll break above anything, but yeah, I don't know.
That's amen, bro. Fuck yeah, I'm with the middle class. You call it what I love it, bro. Seriously, I don't know if they got it when I said it, bro. Like, look. Look at effort, look. That was me. That's my mom. She was a child. Like, where do you think we got? Like, that's it. And nobody showed him any. I didn't have no chat room. No fucking person told me about bonds. I had to read. Fuck out of here. So, amen. We're my middle class, lower class. And if you above that, I'm sorry, but fuck you. That's okay. I fuck myself too. Amen. But we didn't start like that. Oh. So I love you. Amen, bro. But get an IRA, 401k too. And that's what I'm saying. Make your employer match it. Make them give you the money. You know? Amen. Start it. Yeah, that's it, man. But amen. That's what I'm saying. I hope, and that's why you get a long term. So again, I didn't have someone telling me the long term, and I wish my parents grabbed a long term. So hopefully, though, some of you are the age of my mom, or maybe my mom was younger at the time, but you have a long term, and you have a long term there. That's a good start, but I don't know how we got into it so early. We've had a lot of 401k Roth talks today. You know what I'm saying? So make sure you guys take advantage of that. And that's a great way too. Again, if you're working a job, a 401k IRA, especially with employer match, it's a great way to get free money that you can stack up with the long term over time. How old was your mom? I don't know that, but I want to say she was under 30, but she was definitely not 40 in that picture. I don't know. Again, she had a lot of kids. She was young, but. Again, I think my mom had my brother when she was 18 or 19 years old. So to give you an idea, and I'm the youngest. So that's my again, looking at it, it's amazing, but it's wild to think about. Feels like Friday squeeze. Now you're right at open, so we'll see. The bonds are up though. That's it. I'm sorry if I'm getting annoying with it, but. I don't care what happens today. All I'm saying, as long as this don't turn around, that is all that matters. It's crazy though, but that adds up. So again, like that 401k, and honestly, another thing I say, like if you work with the company and they give you shares, they match the like if you guys work with a company that you believe in, like, you know what I'm saying? Like, you work, like, I would buy your own company stock. Don't underestimate that. You know, like, you could literally, like, if you work for Advanced Auto Parts, somebody said they work there. If you work for FedEx, you know, like, I would put that company in my long term. Does that make sense? So it's like, because if you've been working for them for years and you plan to give them your time, you're investing in that company with your labor. So you might as well, like, honestly, you want to share some of those benefits. Unless you absolutely hate your company. You know what I'm saying? Unless you're like, this company is shit, I hate them, I am not going to stay here, I need to get out of here, then obviously, then do your thing. JP, what did I want to check? Oh, here. We're climbing back up here again. All the techs here. Nasdaq is still back up to everything's 0.5%. 5.5, 5.6 Nasdaq and Dow, and then 0.47 on S&P. Qualcomm coming up. They don't offer discounts. Maybe ask them. So usually, traditionally, 401ks and IRAs, they are confusing by default. Again, John Oliver talks about this. It's a messed up industry. That's why most people actually never end up choosing their 401k allocation themselves. Did you know that? Most Americans today who have a 401k, they did not choose it. And they did not choose how to generally define the strategy. Why? Because there's so many options to select, and most people don't know about them, that it's set to automatically decide. And most Americans, you get your 401k shit, you look at it, and then you're like, I don't know what this means. I don't have an advisor. I don't like what you just say you set the default, or you ask your company or whoever, you say, what did you guys do? And then you do it. So that's the general thing of where you can, just make sure you're into it. But whoever has your 401k, wherever it's held, contact them. It should be like a broker. You just ask them, and then or contact whoever your representative at the company is, and ask them if they offer a discount for purchasing the company shares. I'm even talking about, like, it's one thing about like the allocation, but that initial form where they're like this, where you have to like tell them what you're looking for and what you want. Most I think it's like 30 to 50% don't even do it, and they just get overwhelmed. They say fuck this, and then they say whatever happens, just do the default. Just start at default. Yeah, you retire this year, pick this package, exactly. Getting away 8, getting max at 6, that's nice. It's a solid 14. Fixed my dad's 401k last summer. He's at 30% now and pays 95% less fee. Yeah. If fees are, I still got to show you that John Oliver. You guys got to see the compounding of it. It's wicked. But amen. Put in 5 and get it match 5. No, 22. Hey, JG, you at NASA, right? Because I thought of you yesterday. I finally understand. I don't know if this is what you do at work, but I was watching. I was watching this show, and then there was like a space team, and then there was like one of those like people helping out with the launch, and they had like the headset on, and they were like advising them, and I was like, I want to do that, and then I was like, oh my gosh, I was like, there's a chance that's what JG is doing, because they were hella smart, and I realized the people the people behind NASA, those are the geniuses, and the astronauts are just like the Buzz Lightyears. That makes sense, but I was, that's hype, man. That's hype. I'm proud of you. Congratulations, bro. You gotta take me to work one day. I want to see that. I want to, dude. Now I can't stop. I imagine you with the headset on now too. You know that everywhere I feel like you got a headset on, and JG's like he's just prepping for launches. He's like checking back comms. Hold on, you got to reboot. He's like an extra ultra engineer, so he can figure out the problem. It's hype, bro. It's hype. Yeah, take your chat to work day. Yeah, or take your cult leader to work day. I want to go to his work, bro. I'm trying to see this.
Stag. Can take profit in Stag.
Booking stock too expensive. We get 50 match on up to 6% on 401k. Yeah, so it's 50% match. So look at, is it 50? It's not 50 cents total. It's probably 50 cents per dollar. So that means they're matching you 50%. That's not bad, bro. And then again, you could do it on especially if you could get a discount buying booking stock. You'll be great. But if it's 50 cents, it's probably 50 cents on the dollar, up to 6% of your total or whatever. You match 100% up to 10. Yeah, 50 cents on the top. Yeah, that's great. That's 50%. So if you put 1,000, they'll give you 500. You put in 10,000, they'll give you 5,000 or whatever 6% of your thing is at.
Hey yo.
So listen,
We're making money again.
Don't get caught up in the amount. All I'm saying is it's free money. You see what I'm saying? It doesn't matter. It does not matter about how much, because all I'm saying is as long as you put it in, you are doubling up your savings. So if you're telling me I can only save $500 a month, and then you have a company match, you just got anywhere from an extra $100 to $500 saving for your long term. That also has compounding benefits because it's in an account like that. Let me some 401k. Tesla, Disney climbed back. We need to get 86 or 88. Hilton's on the high. So watch if any of the other travel names come up. I'm looking at you, Airbnb. I'm talking to you. Every other travel name, 52-week high. I'm talking to you, man. No? Okay. Rad going for it.
So we are
So you should. I don't know what the game is.
all out of settled cash to trade.
You have the same position as me.
So all I'll be doing is taking profit or booking losses for the rest of the day. That makes it easy. And hopefully I can keep this massive profit up 78 basis points. That's huge. That totally erases yesterday's loss and gains back a lot that I lost 2 days ago, which was my worst day since I started this account on June 19th of this year. Huge day. I think I'm going to trim a little more Valvoline. Yeah, I mean, it's about to pull back. Yeah, it's probabilities. So you can stay big in India. It's gonna be the toughest thing to do is to stay big in it because it's such a strong trend right now. Mexico Ripper.
I tell my homies, I'll be like, just say you're my cousin. And they always get super scared. They're like, I don't believe it. They're not going to believe it. I'm like, trust me, just say it. You got to have the confidence. I'm like, trust me. It never works. Coolest thing I've read all day, right? This guy talking about his job at NASA. You're like, why does that go so hard? Radical going? All right. So here's the deal. Is it at 3? So this is what I'm going to do. Because you guys kept asking me about it. Josh answers. Josh answers. Has updated his price target. I'm not selling it at $3 anymore. I changed my mind. So, but I think you should get out if you don't want risk. I just got you 30%. I'm holding it. Holding for 5. Do whatever you want. Don't. But that's it. Again, 220. I said sell out at $3. You're right here. I would take it, especially if you're a baby back B word. Otherwise, if you don't want to deal with the risk, man, for real. If you don't need to take this risk, that's a fire trade. That's the size of the MPW trade in 48 hours. So you got 30%. Any size of shares is good, but that's it. Well, I'm holding it. I don't think I'm gonna sell out 3. Maybe we could ghetto spread some, but even then, I'm down with it. Yeah, selling half could be a good idea. You could sell half and make it somewhat free. You could walk away. If you did my position, you could walk away with $1,500 of free shares right now and call it a damn day. I never hit 3. Is it too late to go in again? Habibi. Habibi, why do you say this to me, Habibi? Habibi, come on, Habibi. Habibi, look, Habibi, it's not. I don't get, Habibi, why you say this? Why is this, huh? Come on, man. Huh? Every time, it's like it's a never when it's a sheep, they say, Josh, should I buy it? And it's up 35%, Habibi, 31, 32. Habibi, that means that like it go back to tomorrow. Today you lose every dollar you lose 35 pennies. You sold at 25. Then Habibi, why you want? Habibi, yalla, why you be so? Be thankful, be grateful. Or FOMO, kick FOMO. You need to kick the FOMO, not let the FOMO kick in. You know, kick the FOMO. Booking, Disney, J Alt hitting the call outs. Yeah, booking break 31.50. So low key booking has $50 from here. Just crazy. We're at over 3. Our cover call. We should have rolled it over. We fucked up. I did the Uber and I forgot Redfin. If we did the Redfin, we would have made so much money on the rollover after the dive. I'm kind of mad. Give me some notice. I'll get you a day pass. Take your cold. It's in Cleveland. Let's do it, bro. I'm down. I'll give you like a week notice. I'm not gonna lie to you, dog. all of the properties I own in Ohio, I haven't seen one of them in my life ever. And I'm down to go see them because I want to. One of them did some crazy shit and I need to go check it out. So I'm down. But like for real, I'm only coming for NASA and you. That's it. I don't even want to see the houses that much. So please, I'm down. Should have reminded you again. It's okay. What's meant to be is meant to be. So that's the thing. I don't know. Do you guys want me to tell you? Moo, I ban Moo like everybody else who plays around. I don't got time for it. And people who already got spoiled and got money, and they try to charge people instead of help them out. You already know that too, and you know the answer, so you get a time. That a lot of just, I want help people. Why take? And if you already have to, and then be annoying to others. And that's not, honestly, I think in Moomoo's not even that bad, to be honest with you. I don't speak on even Moomoo like that. I just don't fuck with him anymore. But it's like, you know, and just in general, it's just like, it's everything. I'm just like, come on. And I'm not bothered by it. I'm just not silent about it. That's just the difference. Some people, I think, have talked about it. Hold on, my glasses are dirty. I need to clean up.
Hey.
Yeah, because I've been demonetized several times, banned for talking about Pfizer and other things. Again, it's a cold world we live in, bro. It's a cold world we live in. That's it. I give enough free stock stuff. I am excluded on many financial advertiser lists. So it's not even to profit. People don't want to even advertise. Because again, I will tell you how it is. But like I said, I started this for no reason. Not for money. We started it for the people. So amen. That's why I'm saying, like, I'm gonna keep going. I'm gonna keep smiling. I'm gonna do it for the people who want it and anybody or who need it, not even who want it. If you're getting in the way of it, then you're an awful person. But I get out of my way. Thank you. But we got work to do. We were like Robin Hood. Let's go then. Let's make it more like Robin. Bigger Robin Hood. Better. Anything. You know what I'm saying? And that's it. If you need it, it's there. Don't need it, and you are getting in someone's way who needs it, my goodness. Yeah, we're gonna build back better, huh? Yeah, we're gonna build. Hey, we're gonna build it back, huh? How about that? Yeah, hey. Yeah, good shit. Look at that right in, huh? Yeah, amen. How does that work with owning properties you haven't seen? Are you renting them out? Cheap? Yeah, I mean, I have property managers. So I buy usually, it's kind of like stocks in a weird way. I have a price for property. Honestly, with property, it's way easier to give a target price, believe it or not, than stocks. Because stocks are pieces of paper, and there's a lot of people and emotions in them. But once I know my price, it's like, again, assuming the price is low enough and I account for future expenses and what I believe, I don't ever have to look at the property, just because it's a math equation at that point, and then it works. So, and then I have somebody do the deal for me, one of the agents, to like close it. I get a manager in there, and then that's it. I don't know. Can I flex? I have a flex. I mean, I've told you. Here's the beauty that I think you could respect, because I've been telling you this for the last week. You may have heard me non-stop telling you buy cheap houses, buy cheap houses. I still think you should go look for cheap houses, and I keep telling you Indiana, and I am giving you areas. Again, I'm not trying to hide anything from you, and I want you guys to get opportunity. There's a reason why I'm saying it, because like I said, I saw a recent property, and I'm mind blown at what happened with it. And that's why I've been telling you, I'm like, holy shit, this is still there. And now I'm like looking at it and I'm like, wow, it's pretty nuts. So, just what I'm saying is that I had a
In the money.
that I purchased at $150,000 in 2016, or excuse me, 2021. And I rented them out. They're already rented for cheaper than the mortgage. Like these are autopilot old people houses. Okay? Like what I mean is like autopilot old people, like you just buy the house, either cash or mortgage, and then you collect the rent. Believe it or not, I just thought the rates were so cheap. I put a mortgage on this cheap ass house because the rates were at like 2 or 3%. I said, "Fuck it, give me."
Fuck it.
I'll take $150,000 mortgage. Why not? I put $20,000 down. I could have put the long term in there. So if I sold this small long term, I could have turned this into this house. And there were several of them, right? And then you buy it. The mortgage is lower than the rental. It's been like that since I've owned it. Dude, no houses were selling. And then I just checked the recent comps finally. I haven't comped this house out in years. And I go and check the recent comps. This thing's pushing 450, 470. And I threw up a little bit in my mouth. Because then I got mad at everything cheap that I bought that wasn't a cheap house. Because I said, this is hideous. Do you understand what I just told you? Booking. Oh, I think the chat just froze. See, I think we talked too much about other things. Yeah, the chat froze. Twitch, are you guys alive? Oh, there it is. Yeah, I was like, that was weird. Yeah, Twitch just turned up too. Like I'm saying, bro, that's crazy. I was mad, but then I just didn't. The houses didn't sell for a while, and then this new batch of people who just bought, it just went crazy. But like, dude, that you could have turned a 15K long term into almost $500,000 in 2 years. And then again, someone said, why don't I sell the house? The house is gonna pay for my life forever if I wanted to. You make money off the buy. The longer you hold, the less riskier it becomes. So I would never sell that house. That house is only going to pay for itself forever now. There's literally no point in selling it. Even like later, the taxes will even go up, and then as long as you own it, you're not going to change any of that stuff too. So it's just like, that's the whole, like once you get that big of a cushion, you just let it sit there and let it do its thing. You now have assets under your name. It pays for itself, gives you a little bit of income, and then if you ever need anything, it's a giant cushion. It's super safe in that sense, especially once you're already getting the cushion. So small properties, chat. Again, I don't use this as a. I didn't tell you this until today. You know, I've been telling you this the last like week or two, but just like for real, man, like try to find good value on some of them. I don't think it's a bad idea still. Don't buy the ones that are already rocking it up, but it's like find just a solid, just stable rental at a low price with good opportunities. Again, there's a lot of hot places in Indiana, Ohio, all of that. But it's just like it's a decent investment, man. And let me know. I'll help you out with it too. You don't have to go in it alone, and try to stay away from too cheap also. Like anything below like 50, 75,000, sometimes they come with more headaches. So try to find a sweet spot. Speculating on residential property is unethical, I feel. My thing's like child labor. You know, like I think every iPhone is built with child labor. So like, you use an iPhone, you support child labor. I think that's super unethical. It's fucked up. Even like Nike and the clothing. It's awful. Have you heard of the Uyghurs in China? I don't know if you're allowed to talk about them. Super unethical. And we don't say enough about it, and we benefit off of way too many things. People in Yemen as well. And how we treat them. A lot of unethical things that we support. We are all contributing to it, myself included. So honestly, we need to invest and do some other things. I don't think you can talk about that yet. You think bullet trains in Cali will eventually? I don't know if it's gonna be a bullet train. You know, that's my thing, bro. You know what I'm saying? That's my thing. It's great. That's the real estate tin for the future. Travel changes real estate. Apple just had a pop, and then Rite Aid came down from 3.
All right. I'm closing the stream at plus 80 basis points. Plus 80. S&P is only up 50. So that's 30 basis points of alpha.
I did it. I did my first flip, and then after
See you Monday.